Hello, my name is Jerry Yu and welcome to my YouTube channel. Today we're going to be talking about can you use an index universal life insurance policy to bridge the retirement income gap? Before we get started, I wanted to talk about the old wisdom versus the new one. The old wisdom is that you have this nest egg of $2, $3, or $4 million for your retirement in the 401ks, for instance. And then you draw down from that maybe 4% to cover your retirement expenses. But nowadays that number is lowered a little bit to just 2.5% or 3%. And the concept of retirement income covering your essential needs is the prevailing philosophy. Using retirement income that's guaranteed or protected to cover some of your essential needs in retirement is the new way of thinking. And today I'm going to talk about if you have a gap in retirement income, how you can plug it or potentially plug it with an IUL. And first, let's talk about the risk in retirement. These are some of the main ones here. And of course, there are many, but these are the main ones. Longevity. People are living longer. And because of that, after they retire at age 65, they have so many years into retirement. It used to be 10 years after you retire, but now it's 30 or 40 years. Like my grandmother, she is 101 years old and doing well. See, you wanted to have a retirement income that covers your essential needs because you are living longer. Another risk, inflation. So inflation historically is just under 3%, but this year the inflation is close to 9%. See, with inflation, the value of the product that you buy today is going to be much higher in the future. Also, market volatility, and this is a big one. What happens if you retire in the bear market versus a bull market? See, as we know, sequence of return can definitely jeopardize your retirement. Being able to pull those funds for a longer period of time is in jeopardy. Depends on when you retire and where the market is. Wouldn't it be nice to have an income that's protected from stock market volatilities? And then taxes. We don't know where the taxes are going, but if you talk to any financial professionals or CPAs, all indication shows that taxes can go up in the future. So you need financial strategies in place that protect you from taxes. And the next one is healthcare. Because people are living longer, that means that they're going to have more health issues after they retire. See, chronic and critical illness can definitely jeopardize one's retirement income and the spending that they have for retirement. And finally, spending. My past experience tells me that the biggest objection that the client have to overcome is their own spending. Spending for that boat or that fancy convertible. Or how can we negate that risk? These are some of the main risks here in retirement. We wanted to cover those with a retirement income and other income vehicles, and of course the gap in retirement income. See, I have a pyramid here that goes over retirement expenses and the needs here. So we have the biggest block, the essential needs, right? And those are food, transportation, rent, mortgages, and a vacation house and taxes. See, we have to have these covered with guaranteed income source. See, the guaranteed income source such as Social Security or pension, but which fewer and fewer Americans have that. And the fixed index annuity. See, annuity that you cannot outlive. That's how we cover your essentials, something that's protected against those risks and cover your essential needs. And the things that you must have in retirement. And discretionary spending. See, when I told you spending is one of the main objectives, so this is where you cover it. It could be college funding for your kids, it could be down payment on the house, or it could be wedding for your daughter. And that's covered with discretionary spending here. And then your legacy. It's funds remaining for your beneficiary. See, we want retirement income to cover this that's guaranteed and protected. But then we also have these other steps of the pyramid that are to be covered with a retirement source income from somewhere. Okay. And let's talk about the potential income gap in retirement. Okay. We have our essential expenses, that's the bottom step of the pyramid, and that's the biggest one. That's what you want guaranteed. You don't have to worry about and have peace of mind that your basics are covered from a guaranteed or protected income source. See, your essential expenses here is $40,000, and your guaranteed income is $30,000, and that's Social Security and pension. Okay, and the difference here is $10,000, and that's the gap that needs to be plugged with something that's protected or guaranteed, so that you can have peace of mind and then use your nest egg. See, you can use your 401k to cover some of your discretionary expenses, but how do we cover that gap here? An index universal life insurance policy can plug that gap and much more. See, an IUL insurance policy that's tied to the market but not in the market, gross tax deferred, you can take out funds tax-free, and you can use it for retirement income supplement. And you also have a death benefit that's income tax-free passed on to your beneficiaries. See, the IUL can cover this gap and other steps of the pyramid. And we are going to use that IUL to cover that $10,000 gap, but also your discretionary spending, paying for that boat or that fancy convertible, and you can use supplemental retirement income from your IUL as well. Okay. Your legacy, and that's what you're leaving behind to your beneficiary, to your kids, your grandkids, your alma maters, or your favorite charities. See, when you pass away, an IUL is passed on tax-free. An IUL can cover the gap. It can address discretionary spending and legacy needs. An IUL can cover all those different attributes in the pyramid. See, we have shifted the paradigm from having a nest egg to having a retirement income covering your essential expenses. And one last key here is healthcare. I talk about critical and chronic illness, right? And IUL can be used to cover some of these expenses as well. As an accelerated portion of your death benefit, you can use that to cover some of these illnesses. So can you use an IUL to bridge the retirement income gap? Absolutely. But first you need to find out if you have a gap. But the answer is absolutely. So it can be used to cover that gap and so much more. So please contact me to find out if you have a retirement gap, and then also if an IUL is right for you. Okay, thank you for watching.